Good afternoon, everyone. Welcome to another one of our Wednesday webinars. My name is Stockdarts, and you can always follow me at Stockdarts on Twitter or on YouTube, or you could visit me at patreon.com/stockdarts, where I post additional content such as trade ideas and thoughts on the trading process. Just to update you guys, and updating Denise, who I was chatting with a second ago, I still haven't heard anything about Frank or Stock Guy 22 yet. Kind of concerning it's been this long without hearing anything. I can't imagine that's good news, but for now I'm in the dark like you guys, so I don't know anything else, and hopefully I'll get an update soon and I can let you guys know how he's doing. Other than that, let's go ahead and get started. Let's go ahead and take a look at the markets. I'm going to start with the S&P 500 as usual. So we're going to do the usual. We're going to look at the S&P 500. We're going to look at the Nasdaq Composite, the Dow Jones, and the Russell 2000. We're going to see how they're doing, how the market's doing. Once we finish with that, we will take a look at the U.S. dollar, see what it's doing, how it's affecting gold and silver, and then we'll also see how oil's doing, and then we'll move on to the chart requests. Those of you that are in here now, feel free to put in a chart request if you have one. It could be a chart that you're looking to enter. It could be a chart, maybe a trade that you're already in, and you're not sure what to do with, whether it's to take profits or whether it's to worry about a loss. It could also just, if you just want, it could even just be a question about a pattern you see on a chart, regardless of whether you want to buy it or not. It could just be something that interests you, that you're trying to figure out how to read a certain type of price action. Other than that, let's go ahead and get started. And we're going to start with the S&P 500, looking at the ETF SPY. Now, we left off last week with a market that had just hit all-time highs on the Nasdaq, and while the other indices were lagging a little bit behind, it looked like the S&P 500 also wanted to make a move for that. And as we can see, that's exactly what has happened so far. Now, I was not excited about buying last week. I'm not excited about buying this week. And what I mean by that is going long in sort of a major fashion. I think that the market still is trying to go higher, but I don't like the risk reward here, and I don't think there are very many setups that are really worth taking, especially when you note that we're in the middle of earnings season, with the majority of the market set to report in the next couple of weeks. We had the first week was usually the way it works is financials. And then we just had the second week where Netflix reported and a few other names are starting to trickle in. We got Facebook reporting today. But we have a lot of names that are reporting throughout the rest of this week and the next week and a half or so. And so what happens in that situation is a lot of times I find charts that look really nice. And then when I go to Option Slam and I go ahead and I take a look at when they report, and lo and behold, they report in the next day or two. And it makes it difficult for me to find a trade that's worth taking, because you can see a lot of times there's a lot of volatility that gets introduced into an earnings, or during earnings season, and if you're not anticipating that volatility, or you're not trying to structure your play to accommodate that, you're putting yourself at a needless amount of risk, and particularly in a lot of times unanticipated risk, because you're not aware of what's happening, or you don't understand the nature of earnings and how quickly a name can flip back and forth depending on how its report goes. And even a lot of times a report can be good and still be received negatively by the markets in general. So in general, I actually enjoy trading earnings season quite a bit, but I don't like trading it directionally, and not in the manner that I normally swing trade. Typically with earnings season, because of that volatility, I prefer to use options to make sure I limit my risk, and I prefer to trade volatility. And what I mean by that is trade in a non-directional fashion, whether I'm either expecting a move in either direction or I'm expecting a non-move. And I found that that's worked out very well for me during earnings season, but that's not really within the scope of what we look for in these Wednesday webinars. And so I tend to try to focus on directional plays during these webinars, and we're not at a spot right now where I think it's really conducive to trading too heavily. That being said, I think the market's still looking pretty good. As you can see on SPY, we're pennies away really from new all-time highs, right? We've got all-time highs previously last year at 293.94, and we hit up to 293.16. So a little bit less than $1 away from new all-time highs, and I think it's acting like a magnet. I'm pretty sure we're going to be able to push through those highs in the next couple of days. However, I do think that we're still sort of setting up for a pullback at this spot. Now, the interesting thing is, and we'll get to it in a second when we get to the NASDAQ, is the NASDAQ has really pushed right through those highs. And so the market continues to really just push forward, which is really impressive with what we've had throughout 2019. And I pointed this pattern out last week, where every time that the market has sort of hit what's supposed to be a resistance level, it hasn't spent that much time at it, and then it's sort of pushed past it. For instance, we first found a little bit of resistance at 255, and we pushed through it immediately. We found a bit more at 263 and pushed through it. We found some more at 280, and it took a bit longer to push through, but we did push through it. And now we're coming again to what should be major resistance. And on the Qs, we have already pushed past it, and on the S&P 500, we continue climbing right up to it. Now, I suspect, again, that we will spend a good amount of time at this level. I don't think we're just going to blow through it, but I am open to the possibility that we can possibly just continue climbing right through it without really stopping. If that's the case, then the scenario that I would look at as far as getting more involved to the long side would be once we push past it and then retest and confirm and hold above that level. So at the moment, we're breaking out, but I'm not interested in that breakout. Like I said before, I don't think risk reward is really very good here. Going through a bunch of individual charts, I'm seeing a lot of charts that don't really reflect what I'm seeing in the markets. So overall, I'm a little bit distrustful of what I'm seeing here. Not necessarily in thinking that we had a top and ready to roll back over. More along the lines of I'm not that excited about trying to get too long here for a number of reasons that I went over. So what can we expect here? And it's going to be a lot of what I said last week, but basically what I'm looking for right now is any kind of a consolidation pattern that could set us up for a nice move, particularly in the next couple of weeks once we get through some more of these big earnings like Apple, Amazon, Facebook, and Google. And then I think once those are out of the way, we can go ahead and start trading based off of how they perform during the earnings season and during the earnings reports. And then we could see a much clearer sort of indication of where we want to head and whether we really are ready to push through these highs and continue to form a new leg up in our major bull market that we've had for the last 10 years. For now, from here to next week, what I'm looking for is a pullback. And it may happen, it may not happen. If it doesn't happen and we continue higher, well, then I'm just going to kind of sit on the sidelines and continue to take my earnings trades, continue to take my Forex trades, which have been working nicely, and just wait for a better opportunity with the stock market. If we do get a pullback, then I'll want to see where we go back down to and what kind of support is confirmed once we hit these levels that I'm about to point out. So on the S&P 500, as I mentioned last week, and I'll mention again this week, I think the first pullback will be just to the 20-period moving average. Right now, we have the moving averages aligned in a very bullish manner, particularly the 20 and the 50 period, as they are both kind of going up in almost parallel train track fashion and have crossed the 200 moving average, which all indicate a very strong sentiment, or a very strong bullish sentiment, a very strong trend to the upside, which, of course, they're lagging indicators, so they're showing you, to a certain extent, they're showing what trend we've already seen. But these trends tend to persist. Imagine a trend in a stock or an equity is a lot like a train on tracks, right? And once it really starts to get moving, it takes a while for that momentum to shift. You very rarely get these immediate shifts in momentum, which we actually to start this year. But more often than not, what happens is sort of like what we saw in the middle of last year, where it took a bit of time for the train to sort of slow down. And there were signs that we were starting to see some slowdown. For those of you that remember, once we started hitting September, I had seen some signs that were telling us that we were ready for a pullback, and warned about it just before we did start to pull back. And the price erosion process, a lot of times, is a little bit more methodical than I think you would imagine. And more often than not, we do get some warnings of when prices shift. Now, again, not always the case. To start the year this time, we did get an immediate shift. But usually you start to see momentum wane, and we are starting to see the momentum slow down a bit, but I don't think enough for us to really worry too much yet. But I did, we definitely have seen momentum slow down. An easy way to point this out, and I pointed this out last, but just draw a trend line, right? And then notice the slope of that trend as you start to move along the trend and how it starts to sort of flatten out, right? And it gives you a better idea of just where momentum is going. And you can see that over the course of this year, every couple of months, we've had the speed of this sort of ascent slow down a bit. So we are starting to see the price action slow down. We're at major resistance. So at the moment, I'm a little bit more inclined to be patient and wait. And so what I want to see now is, where do we pull back? Usually in strong trends like this, the first pullback is to the 20. You can see the last time we hit the 20, we kind of overshot it, but we came right back and kind of came up and tested it again, and then had a really strong move. And I think that's probably going to be the case again, where our first move is going to be the 20, and then it might try to attempt to bounce, and we'll see whether that can get us back through, or whether we need to come back and test the 50. As far as the levels that I'm looking at and where I would really be interested in going more aggressive to the long side, I think as long as we stay above 280, we're good. And then the other scenario again is, if we continue to push higher, then it will be a pullback into this area, which again it'll be a little bit easier to see once we get to the Qs. But as far as the S&P 500 is concerned, what I want to see right now is see how long we can maintain this upward trajectory. And you can see we almost lost it a couple days ago. Once we do, if we just bounce to the 20, I'm not that excited about buying that dip. I'd prefer waiting to get to about the 50, and possibly even down to 280, at which point I think the risk reward will be much better suited for some high probability trades. However, if we lost this 280 level, then I think that it could end up being a messy trade. So when we hit this level, I'd like to, I'm going to wait for some hammer candles, some bullish engulfing patterns, anything that gives me a better idea that we have found support and that the buyers are back in control before I want to get too heavily invested to the long side. After all, once we do lose this level, there's always the potential that we start to see price action erode even further and possibly get a mirror similar to what we had last year. Now, of course, I don't think that's the case at the moment, but just looking into the future and looking into what can happen in the next 2 or 3 months, there is the possibility that we continue to see price action erode at these levels. Now, what makes me think that might not happen is what we're seeing on the Qs. If we go to the NASDAQ, we can see that the NASDAQ has blown right through all-time highs, right? And is doing an incredible job of continuing higher. We pointed out last week, and actually over the last 2 or 3 weeks, that if there was an index or an area that was going to push the highs first, it was going to be tech, and it was going to be the NASDAQ. And that's been the case so far. And I think we're setting up a situation now where when we finally pull back, as long as we stay above 187, I think that bodes well for all the markets, obviously not just the tech names, but all the markets in general. And this could set us up for a new leg up in our long-term trend, right? If you take a look at what we've done in the long term, we'll even go to a monthly chart, and you can see we've been witness to a historic market here from 2009 to now, and we've had a pretty decent consolidation, a pretty decent amount of going back and forth, and it's to a certain extent already kind of mirroring what we saw in 2015 to 2017, and it could be that we're ready to push through it. Now again, me personally, I feel like we need more time at these levels, but my thoughts don't really mean much as far as what the price action wants to do. We have to just follow what price action feels like it wants to do, and if we're ready to move forward, then we're going to see it first on the Qs, and I think what we're going to see is we'll see a pullback. If we continue to hold this green trend line, then wow, we're just going to continue sort of moving upwards in a pretty strong manner. But if we do lose that green trend line, I'm not concerned as long as we hold above about 186 to 185. There's a chance we backtrack a little, but as long as we hit the 20 and bounce right back up, and as long as we maintain price action above the all-time highs from last year, well, then I think that we're going to continue going higher. And I think we're going to see the same thing in the S&P 500. I think we're going to see the Dow Jones and the Russell 2000 make their way towards their all-time highs. And then we'll see what happens as they approach their major resistance levels. But if you're looking to go long and you're looking to get a sign as to whether it's clear to continue trading to the long side, keep watching the NASDAQ and see how it behaves as it comes back and retests at all-time highs. As long as it stays above that, we're in a very bullish market that intends to go higher. Once we lose this level on the NASDAQ, then we can start to see what happens across the board and see whether that's a sign of an impending top, or whether that just means that we need to consolidate and continue trading around these levels. Because again, we've pushed right through this with really no sort of struggle at those highs. So if we did pull back, even below that level, as long as we stay in this area here, it's still pretty bullish. It just means we need more time to consolidate and sort of trade above it. And we'd have to see whether we start to backtrack and start to lose a lot of these price levels that we already pushed through. But as long as we stay even in this area, I think it's still pretty bullish. So despite the fact that I consider 186 to be the important level as far as short-term bullishness, in the intermediate to long term, even if we do lose that level, there's still a lot of bullish opportunities that could play out as long as we spend time in this sort of upper edge of last year's range and don't sort of backtrack and really retrace the entire move that we've had to start this year. So overall, things are very bullish. Even though in the short term, I'm not excited about going too aggressive to the long side. I think it's still a pretty bullish environment, and I think things are still looking pretty strong. And I think until things change, we should again be looking at just trading to the long side. So, short trades right now, trying to call a top. I think that's a fruitless endeavor. I don't think that there's a lot to be gained from trying to do something like that. I think we just need to be patient and wait for opportunities that give us better chances at playing to the long side. And that's what I'm doing right now. Is either again looking at looking at earnings trades, or waiting for a better consolidation to go ahead and try to go long as far as the markets are concerned. There's nothing really up as far as overhead resistance. Yes, we have resistance now, but I mean it's not really. It's just where we're exploring. I would say for the most part, all we have to worry about is kind of look in the rearview mirror and pay attention to this green trend line. Pay attention to 186 and pay attention to the 20-pair moving average. As long as price action stays above those three, continue to look at playing to the long side, and hopefully we get a nice consolidation that gives us a better setup as far as trading with risk reward in our favor and with timing in our favor. Again, right now the timing's not on our side. The market's gone up quite a bit, and typically there's an ebb and flow to it, and it looks like it needs to pull back soon and sort of have some shares exchanged between buyers and sellers before we're ready for another leg up. And if it continues, then again, it doesn't really bode well for anyone that tries to chase this price action. It's better to just wait for an easier opportunity to go ahead and trade. Now, if we look at the Dow Jones is inching its way closer to all-time highs. It's not there yet, but it's slowly making its way. And overall, again, I think still a pretty bullish chart, right? We've got a new move coming. Last week we saw what was happening, where we had this nice retest of 261, and then we were able to sort of break past it, and we're just really kind of dealing with short-term resistance, and we've been able to push through that. And again, the closer and closer we get to the all-time highs, the more they act like a magnet, attracting price because it needs to be tested, and we need to see whether we can push past that or not, and see exactly where sellers will be if and when they decide to show up again. Overall, this looks like another index that wants to make its way to all-time highs. If the S&P 500 hits theirs, there's a good chance the Dow Jones will follow through and hit it the next couple of days, if not a week after. And overall, everything I just said about the other two, about the S&P 500 and the NASDAQ, applies to the Dow Jones. We've got the 20 and the 50-pair moving averages moving nicely upwards in a pretty bullish alignment. If we were to lose our short-term momentum, a pullback to the previous resistance level that now should be support would be a good spot to look at buying the dip, right? So on the Dow Jones and DIA, it will be somewhere around this 261 to 260. Well, yeah, basically 261 or so, as the spot where you'd look at as holding for a support zone. As long as we're above that, I think it's pretty bullish. If we lose that area, there is going to be some messy price action as we slice through the moving averages and maybe come back and test the 200. I think overall, anything above this 252 area is still pretty bullish. In a similar vein to what I just mentioned on the NASDAQ, if we do lose these short-term levels and come back and say we had to spend some time in this area on the NASDAQ, well, it's the same sort of idea with the Dow Jones. It doesn't seem like it's bullish if we end up losing some of our short-term levels and come back to here. But in all honesty, as long as we stay above this area or in this area, it still means that we're just spending more time sort of confirming the breakout above 253, 254 that was kind of critical that we had back in February. And overall is still pretty bullish as long as we stay above the 200 and continue to sort of find buyers in this area and make our way upwards. Again, it doesn't have to be a race where we just slice through all resistance, even though that's what we've done to a certain extent this year. You can see the Dow Jones did spend more time really sort of rehashing this area and trying to make sure we had enough buyers to sustain the price action above 252 and above this critical area here where we had this kind of collision between these two major trends. One, the major trend to start the year going up, and then last year's trend going down, where we were just sort of selling off little by little after topping out in October. Right, so overall, again, this is another bullish chart. Nothing too concerning as far as the overall health of the markets. I think, again, things are still looking pretty strong, and it's really just a matter of timing right now. We want better risk reward, and we want a better sense of timing as far as consolidation is concerned. And what I mean by that, by the way, guys, is typically if you want good risk reward and you want a good entry into a name, you want volatility to contract and you want price to be at a pretty good support level. So looking back in hindsight, this wasn't that bad what we saw a couple of weeks ago, where we kind of pulled back and tested the 260 area. We had price kind of coming back to support. It wasn't really contracting enough, but you had that nice little bull flag, and then eventually you gap up and move past it. It makes it difficult when you have a gap through these zones, but you want to see stuff like that. You don't want to see price action just kind of steadily climbing higher, unless you're in the name. If you already entered, then yeah, you want price action to just continue to sort of trickle upwards. But if you're looking for an entry, you want the opposite of this. You want price trickling down into support, and you want volatility contracting, so you get that quiet price action right before the big move, which tends to give you a better entry and a better move off of that. When you have price action kind of rising like this, every day that it goes up, your risk reward gets worse. Every day that it gets up, your entry not only gets worse from a risk reward perspective, but from a timing perspective, it's just that's that many more days that it's gone up without you in it, which means the people getting in are the weaker hands that keep chasing price action, which tends to lead to sort of swifter moves back to the downside. So for the moment, we're just going to wait. We're going to wait for better opportunities. Doesn't mean there aren't trades to be taken. If you watch, if you go ahead and follow me on Patreon, you'll know that I'm still finding trades to take. It's just they're a little bit more sporadic in nature, and it's a little bit more of sort of just picking and choosing a name here or there, rather than trying to get too heavily invested in what in a major trend shift. Now, the last area we want to look at is IWM and the small caps, and clearly you can see that the small caps are still lagging quite a bit behind the S&P 500 and the Nasdaq, and even the Dow Jones. That being said, we had a very nice bullish start to the week with two real strong moves off of this convergence of moving averages. We've got the 200, the 20, and the 50 all right next to each other, bunched up. This is the beginning of what a lot of people call a pretty big bullish indicator, right? This idea of the golden cross, where the 50-pair moving average crosses over the 200, showing that momentum is shifting to the upside. I've mentioned before this idea that if the markets are ready to push forward, as we're seeing on the Nasdaq, then there is a lot of room for IWM and the small caps to play catch up. You can see there's this huge vacuum here, where there's a lot of ground that needs to be made up if IWM wants to sort of join its peers in this idea of starting a new leg up in our bull market. So with the bullishness that we've seen these last couple of days, a little bit of a bigger move on Monday than what we saw on the S&P 500 and the Dow Jones, there's a chance that we could start to see some momentum increase pretty strongly on the small caps. And if we see the rest of the indices continue to climb higher, it's actually a decent idea to start looking at some small caps and see if we could find some that are mimicking this pattern and have a lot of room to sort of play catch up and to start moving forward. Again, the moving averages here, the pattern that we're seeing is usually indicative of a pretty nice trend to the upside. So despite the fact that we're seeing a lot of the other indices at pretty strong resistance and risk reward doesn't seem to be that great, the small caps actually look like they might have decent risk reward depending on the pattern that they're forming right now and where they are within respect to the similar sort of idea of what IWM is doing. Again, if you take a look, very similar to what we just saw on the Dow Jones, we had this trend, this negative trend from last year. We had the positive trend from this year. And what we're doing right now in IWM is, again, just sort of proving that this was a successful breakout, right? Holding above this 152 to 151 area. And it's done in a little bit of a weaker manner compared to what we saw in the Dow Jones, right? Because the Dow Jones really never lost that level by too much. And with IWM, we're seeing that it did sort of backtrack a bit, and we had lower lows, at least for a little bit, as we sort of came back. But we're right at the cusp of breaking past this and kind of confirming this this breakout and pushing forward. And if we do push forward, there's a lot of room to be had here. So this is an area where you can look at and maybe finding some names that are forming similar patterns that have plenty of upside without having to worry about overhead resistance. So I still think the tech names are the best place to look, particularly the ones that are going to be confirming new highs and confirming support at those levels. But I think that there's a case to be made for small caps to have a lot of significant upside if we could get this breakout. If we can actually see a nice move through this level and we sort of leave this area behind, then I think that there could be a nice rally coming in the small caps that could give us something to look at while we wait for some of these other names to chug through and just push through their resistance levels. So this is a spot that actually looks pretty nice to me. Again, off of what we're seeing today, it's a little bit more difficult, right? Because we had a big move already from 155 to 158. You can see we're having some selling pressure at this level with the candle that we're forming today, this inverted hammer. But we'll see what happens as we close today and what we do over the next couple of days as we deal with this 158 to 159 level. But if we could push past that, I think that there is potential for a nice move on the small caps. So that's the four major market ETFs. And I think that we're still in a pretty bullish environment. I think, as you can see from IWM, there's still potential for a lot of room to the upside in the markets in general. However, the timing right now I feel is a little bit difficult just because of where we stand as far as the risk-reward perspective is concerned, and how the timing is as far as looking for trades in the middle of earnings season when you have a lot of names reporting. But I think that as we start to get more names report over the next couple of weeks, we should get a better idea of how we're going to deal with these highs. And if we continue pushing past them, there's going to be some nice long opportunities in as long as we go ahead and look at scenarios that don't put us in danger of just chasing price action blindly higher. Overall, one other thing I want to point out is with earnings season is you can always watch the names of report and trade them after the report, right? Just wait for them to consolidate after the report and then go ahead and play those to the long side. And that was kind of the gist of my post yesterday in patreon.com was we've already had 2 weeks of reports, so take a look at those names and see if any of them are sort of confirming and retesting whatever breakouts they had, and go ahead and play those to the long side if they do go ahead and trigger their entry signals. And I think that's what we can do these next couple of weeks is while we're waiting for the market to sort of figure out what it wants to do with these impending resistance levels, take a look at the names that are reporting and then watch how they consolidate off of their moves. And the ones that had strong moves will hopefully sort of continue persisting higher once the market's ready to push through those levels. All right. We actually have a few chart requests, which is nice. Glad to see. I appreciate the participation. Denise West, we will look at yours in a second. Let me take a look at the U.S. dollar. We'll look at gold and silver, and then we'll move on to the chart requests. Anyone else that's in here, we have a decent turnout today. If you have a chart you want to look at, feel free to post it in there, and I'll take a look at it and give you my thoughts and what I think about it. Now, I mentioned last week that we were on what looked like the cusp of a strong move on the U.S. dollar. and that has played out. I don't know how many of you guys trade Forex. I don't think any of you do. It's a shame because there's a lot of nice moves on these, and there was some pretty good moves off of the Canadian and the Euro that have played out and may continue to play out. The UUP index, as you can see, had a nice surge upwards. So the US dollar had the breakout we were looking for off of this pattern, right? And at this point, it's starting to reach a point where it's probably at resistance. But I think it can persist a little bit longer based off of what I'm seeing on the Euro. If we go ahead and move to the Euro cross now, you can see that we did get that breakdown. And as a matter of fact, it's breaking down as we speak. But this was an easy broadcast move that I pointed out last week. And you can see what we were looking at, right? We've had this erosion in price action. This is what I was talking about earlier about when you can see price action eroding, where you had an attempt to hold. The critical level here is 113. And we had eventually we were trying to hold above it, failed. Then we had this nice triangle where we tried to break above it, failed, tried again, failed, and then we were on the underside of it. And every time we've tried now to get back above 113, the price action has ultimately sort of failed and sort of progressed lower. And then last week I pointed out this nice area here where if we failed to break past 113, that there was a very good chance that we would see a major breakdown on the Euro. And it looks like that's what we're getting right now. We've had a pretty strong move from basically from 113 all the way to 111. So a very big move as far as Forex is concerned. And I think that there's potential for even further downside. When we go ahead and take a look at a weekly chart and see exactly what we've lost here. This was a very critical area, and we've had a major sort of breach of it now. And looks like we're going to head even lower. And I think at this point, we could look at price action heading all the way down to maybe 110 and possibly all the way down to 108, which would be a huge move for the US dollar if this all occurred quickly. There's always a chance that we go ahead and try to retest this area once again, this 112 to 113. But at this point, it's pretty clear that the US dollar has won that battle with the euro, which again does not bode well probably for gold and silver, but does bode well for the US dollar. Now you can see the impact on this US dollar strength also. The US and the Canadian had a huge sort of breakout as well. And this was another one I pointed out last week. This is still pretty bullish when you look at the inverse head and shoulders we had watched back in February and this consolidation range that we've seen in the last couple of months. Well, we had that big breakout today. And again, this is a big move. These are big moves on Forex, and anyone that trades this would have loved to have been involved in this. These are nice moves. Now we have one US dollar cross that's not ready yet, and this is probably lagging a bit behind, but this is setting up for a bullish move as well, or bearish, depending on how it resolves out of this. But I think that this is probably hinting at a bullish move through 112, and if that's the case, then you've got to move all the way up to maybe even 113 and possibly the mid 113 area, but there is potential for further upside on the U.S. Japanese yen. Now, it has lagged compared to the other two crosses that we like to look at, and there is a chance that we do lose this level around 111.60, but I think more likely than not this breaks out to the upside. And again, what I like about this is these are clear signals. Either to the short or the long side, it's very clear what you need to see happen, whether you want to watch it like that or whether you want to watch it with a horizontal level like this. It's very easy to see exactly what we're waiting for, and the trend lines will tell you exactly when it's worth entering or not entering. Overall, the US dollar has been strong, and so that's been reflected a bit with GLD and SLV. Now, interestingly enough, they're still trying to hold up, right? You can see gold is actually up the last couple of days, although it gapped down once we saw that euro move really start to take a hold. Overall, it's still trying to hold, but this is not a good look for a chart, right? When you have this level of what was support, and now we're trading underneath it, and we're just kind of trading in this little island below what is now strong resistance. This is really not that positive, and until GLD gets above 120, 130 or so, this is a bearish chart, and a chart that probably needs more time to go ahead and let the US dollar do its thing and sort of just try to test its 200 and stay above it. So overall, despite the fact that we have 2 green days in a row, I am not at all interested in trading GLD to the long side, and I am not at all interested in trading SLV to the long side, which again is in the same place. And again, it's nice. It's actually moving up with the US dollar, which is a rare thing. But there's too much pressure, I think, from the U.S. dollar for me to want to get excited about SLV and GLD at the time, at the moment. Matter of fact, I think they're setting up bearish trades right now. Once they hit these resistance levels, particularly SLV, you take a look at the moving averages curling back down to meet price, and it's coming up right into this key support zone, or that should now be resistance. If the U.S. dollar continues to rally, I expect this to be a good short play. Although it's not really that much in SLV, and you're looking at a move of 20 or 30 cents, so not really that worth trading. Now, the final commodity we want to look at is oil, and oil continues to do its thing, continues to go higher. This has been a recommended long trade for quite a while now, whether it's oil or whether it's oil-related names. And as you can see, oil's just stair-stepping higher and has made its next move. And at this point, is more likely than not going to set up another staircase along this trajectory. And very similar to what we were pointing out in IWM, we're starting to get this cross of the 20 and the 50 period moving average above the 200, which again, it's a lagging indicator, right? We've had an uptrend for a while now, but typically once you see that, it indicates that the trend is still potentially, there's still plenty of potential for the trend to continue and persist upwards. Now, is oil ready to hit the 70s again? I don't think so. I think that that's still a major level, and that could, if we did come back to that level, that could impact the markets overall. One thing I never like to see is the U.S. dollar, oil, gold, and silver all rallying together. And I don't think gold and silver are really rallying, although they're up these last couple of days. But when you see all of that moving together, that puts a lot of pressure on the markets. So we'll see whether this is something we need to watch as it moves forward. But for now, it's just oil's doing its thing, and it's bullish. And until it changes, we have to just play oil to the long side. Overall, this is still one of the areas that you can watch. And I mentioned this last week. If you're hesitant to trade the stock market right now because of the risk reward, where we are at resistance levels because of earnings season, because whatever all these different reasons are, well, there's still oil names that we could trade that are maybe not that correlated to what the market's doing, and they tend to have a little bit of a different earnings schedule as well. And sometimes some of these still have a few weeks to go before they report. At this point, we already had the big move I pointed out last week, and we probably have to wait for the next consolidation range. But I think overall, oil's still doing well. And until we see a change in this, and it could be a while, because once we lose that first trend line, we still have that second trend line to contend with. So there's still a lot before we'd have to worry about oil. But we'll see how it behaves and how it continues to behave over the next couple of weeks. All right, so that's oil, gold, and silver, and the stock markets. Let's go ahead and take a look at you guys' chart requests. We'll start with United Health for Denise. And what I'm going to do again, every single name we're going to look at, first thing we want to check is earnings. All right, so they already reported, which is good. Okay, so this must have been the earnings move. It was not a good one. Tell me your time frame here, Denise. What are you looking for? You can see, by the way, I had looked at these guys that middle of last year, they were all setting up pretty bullish plays, which actually worked out pretty well for a time. Interestingly enough, that was a critical level there. You're looking at it as a swing trade. Okay. I don't know that I'm that, from what I'm seeing right now, I don't know that I'm ready for this as a swing trade. And so here are the key levels I'm looking at, right? We could probably draw this too, although I don't know how important this will be as it comes down to it. But what I want to point out here is there's a lot of critical overhead resistance on it right now. It did have a nice V bottom. That was major volume. This is typically a pretty well-behaving name. This is not a name that tends to have crazy volatility and crazy swings. And this looks like it's probably going to be a pretty major bottom, around 215, 214. But as we can see, it made a big move, and now it's coming up into overhead resistance. And so if you're looking to enter, it's a good dividend player. This is actually a good name. I like this name, and I like trading this name. But I don't know that I like it right now. You just take a look at what I'm watching here, and we had a nice move, but we have a critical level here, 230. We have to get above. If we do get above that, well, we have this trend line, which I don't think is that significant, but it will be important at least the first time we test it. The 20 period is swooping down pretty quickly, and then we have like these levels here, like 235, and then 238, and then 245. Now again, that's plenty of move. That's still 20 points to the upside, but I think that there's going to be a lot of resistance it has to push through if it even gets above this level, which again you can see with the wicks over the last couple of days it's already struggling with. So this is the kind of name that I would put on my watch list, and I would look at trading it in two respects. One is either trading it here, or two is trading it when it's here. That could be a 2 weeks from now, or it could be a month from now, or it could be 2 months from now. It could, once it breaks 232, I could see the idea of trying to go long, but again, I just think that there's so much potential areas where it could reverse on you that it wouldn't be an easy trade. And I think I mentioned this idea last week, and I know obviously it's a concept I've put out quite a few times. Is you're not just protecting your financial capital, right? You're trying to protect your emotional capital, and some trades are just, they're too difficult emotionally as far as the amount of trouble they could give you thinking about the trade. And I think this is one of those types of trades where it's a name you trust, and it's a name that found a good bottom, right? So you figure it's worth trading to the upside because you trust it. But once you get into this trade, you're going to, all of a sudden you're going to be mistrusting the price action at 232. You're going to be mistrusting the price action at 235. You're going to be mistrusting the price action at 238. You're going to mistrust it when it hits the 20, when it hits this trend line. There's so many areas where you're going to doubt yourself and want to close the trade early. That it's the type of trade that sort of lends itself to having traders behave poorly and break their rules. Because there are so many times where this is going to go up somewhere where you're going to doubt yourself and start to think, well, maybe I should just get out because I think it's a trade that I shouldn't have taken. So I think it's a trade that I would wait, and I would wait for a clear opportunity once it clears all of this mess. And there's always a chance that this thing continues to bounce higher because it is a name that I think behaves well typically. But if it does, it just, there's more trouble than I think is worth what it can do right now. Okay. Yeah, I would agree with that as well. Actually, you know what? Before let's take a look on how's Anthem doing. So they're doing poorly as well. I think a lot of these health names had poor earnings. What was another one? We've got Molina was one of them, right? They're doing a little bit better. Yeah, I think in general, yeah, the healthcare names, you could tell a lot of them have just had recent breakdowns. All right, let's go back to Merck. All right, so Merck, did they just report earnings as well? Oh, okay, so Merck reports in a week, right? So this is what I was talking about, and I mean, not that I don't think I'm going to like this pattern anyway, but this is another name that you've got an impending earnings report, and while they're not overly volatile, it's still 3 or 4% of uncertainty that you don't really want to put yourself into. And sometimes it can move all the way up to 6 or 7% or even 10. So overall, again, I see what you're doing here. You're looking for discounts on names that are very strong in the long term, right? And this thing has been a nice climber for a while. You can see it has started to lose momentum, but this doesn't always mean that it's sort of like a death toll for the stock. A lot of times, once they break these steep trends, they just trade sideways for a while, build a base, and then continue upwards, right? And you can see on the weekly chart, we've got a nice support here around just above $70, around 72. And overall, it's got, it found support. It's above the 200, so I can see the appeal of just buying support here, right? However, we've got earnings coming in a week, and I don't know that I see a pattern here where I think we could benefit from a week-long move. I think if you wanted to play this directionally, and it's not something I really endorse, but it would maybe be to buy some call spreads, hoping that it has a good earnings report. I feel like that's kind of usually that's just a gamble. Playing to the long side on earnings like that, just hoping for a big move up. But what I'm seeing right now, I don't think that there's enough time for a move to occur between now and next week that is worth taking based off this pattern. I think if someone bought this 2 days ago, once we had these two hammers and these two tweezers, and they entered off of 73, I could see that as a nice long move off of this. But I think we've already had a good portion of that move, and as you can see, we've had pretty good selling over the last couple of days at those levels, right? Especially if you look at it maybe on a 5-minute chart, you can see that we're starting to find a lot of resistance here at 75. And this might spend the rest of the week consolidating, waiting for earnings next week. So I think this is another one that you put on the watch list, and you see what happens once earnings occurs. I think if we have an earnings report and it moves back down to 72, that's actually not a bad spot. So let's say it has a poor earnings report, right? And it starts trading around this level, and you start to see some signs of buying. Well, I think this has established itself as a pretty good support zone. And that would be a good spot to go ahead and try to re-enter in a long play. And then if it gaps up, I think that you're kind of stuck, because there's going to be limited room to the upside after this pretty strong move down into earnings. But there's always the chance that you get something that there's some new clarity that comes out after the earnings report. But I think because earnings is coming up so quickly, it's not something that I would spend a lot of time trying to go ahead and get long now, because you're just putting yourself in a position where it can move up 4 or 5% in either direction, with really you don't really have control over it. Okay. Oh, you know what? I didn't read the rest of yours. It had a nice bounce off the 200. Where to exit? I should have read the whole sentence. Sorry, Denise. Well, my thoughts I think are pretty clear. It found some selling at 75. I think at this point we've got a week to get rid of it, right? So we got to shift in what we're thinking now. You should have cut me off and told me. So watching it in the short term, we've got this now, and you know what? I feel like this is kind of a critical spot here. So watch how this behaves over the next couple of days and see if it has more momentum to the upside. But I feel like you probably want to take some off at 75, and you probably don't want to hold it through earnings. So just watch to see how it does in the short term. So you did catch the bounce, which is nice. That's what I was talking about. I think maybe it has another point of upside. But at the moment, I'd watch this price pattern. Your calls are up 16% on Merck, and you'll take the profits. Okay. Which is fine. If you could get it up to 75 again, I think that would be a good spot to look. We're getting a nice little candle here. I think if it loses 74.50 or so, that's not a good place to be. But I think for now, if it could bounce here and make its way back up to 75, I think that's a good spot to take some off. And then what you can always do is just either close out the whole trade, or you could sell a call against one of your calls and leave it as a vertical spread into earnings and see if maybe you get lucky with a big move. But probably better to just close it out prior to earnings. And I think 75 has shown itself to be a pretty stiff resistance level over the last couple of days. But we'll see if this momentum can persist depending on what the market does. But yeah, I wouldn't hold it too much longer based off of earnings coming up. Okay? All right. Next question. I'll make sure to read the whole thing. American Express, is it breaking out? And if it is, what would be an entry price? All right, so let's take a look. I don't think that all the credit cards reported yet. Well, I guess they did. So they reported April 18th. When did Visa report? I didn't pay attention to them. Okay, so Visa reports today. I thought I remembered something along those lines. All right, so American Express already reported. This is all-time highs, isn't it? All right, so like the markets, they're at all-time highs. I want to point out my thought process with the markets applies to something like American Express. Okay. Wes says, looks like my advice on Merck probably applies pretty well to his MRTX, which we'll get to in a minute. Denise and I must have been watching the same screener. I wonder if you guys, it's interesting, I wonder how many of you guys look at the same names. You know, a lot of times it's funny. That brings up a point, Wes, when a lot of times what you're thinking, you'd be surprised how many traders are thinking very similar things. I found that that's actually a nice trick to reading the market, is what you're thinking, more likely than not, there's a lot of people thinking the same thing. And it's not just, I mean, because the chart looks good, but it could also even be when you're in a trade and you're trying to figure out whether you should take your profit there. The good chances there's a lot of people thinking the same thing as you at the same levels. It's actually surprising how often we all look at the same things. So to go back to American Express, Denise, I think it looks like it's breaking out. This is very similar to my thought process on the markets right now, which is I don't know that the risk reward is here for the breakout. Now, sometimes, you know, breakout trades are worth taking. And if you look at how the S&P 500 is setting up, it's setting up for a breakout as well. And there are a lot of names that, of course, are going to mimic the markets. The problem I have with this is I don't like taking breakout trades that are setting up like this. What I like to take as far as a breakout trade is if it does this now for the next few days and then breaks out with an increase in volume. So if we look at our volume pattern, right, and we had a decrease of volume and then we had the breakout, right? So this is how you want to trade a breakout. It wasn't a breakout, but what you want to see is you want to see a consolidation pattern, and then you want to see a move up, and the move up should occur with more volume, right? And we kind of got that, the nice big burst of volume as we climbed higher, right? So now we're back at resistance, and we've gone up 1, 2, 3, 4 out of the last 5 or 6 days, right? And in general, if you look at the last 2 weeks, we've gone straight up over the course of 2 weeks, right? So at this point, momentum's a little bit tired as we're hitting major resistance, right? Because it's all-time highs. Is it worth playing a breakout to new highs? Yes, I think it could be worth playing. The risk reward is not that fantastic right now, but if we can get a nice consolidation over the next few days and then push out, then I think it makes for a great breakout trade. If you're not comfortable with trading the breakout, which a lot of times I am not, then what I would like to do is similar to the NASDAQ, is I'll wait for the breakout and then watch for the consolidation above it. And I may or may not get it, but if I do get it, then it makes for a much higher probability trade than a lot of times this back and forth through highs as it tries to reach it, right? And you can see the last time it made a big move up to highs, it had a nice 1, 2, 3, 4, 5, 6-day climb, and then it just pulled back because it was just too tired to kind of continue trying to push past that, right? And then now we've kind of made our climb right back to it. It's a little bit of a slower manner, but it's the same idea that it's just climbing up to these highs. Now, that being said, if Visa has blowout earnings, there's a chance that American Express has a sympathy move and tries to push past it. And if it does, then you can either try to play it to the long side, but I think I would wait because this mirrors exactly what I mentioned in the stock market in general when we're just looking at it in more of a theoretical sense of this move to highs where the risk reward's not great right now. Because if we do get a breakout, where do you put your stop, right? Do you just put it at the breakout level? Do you put it all the way down here at 111? Do you put it way down here at 109? What exactly is the spot where you tell yourself my trade is wrong? And if it is right, well, how high are you looking for this to go, right? So I think for a trade like this, I don't know that I have a clear-cut answer. But if we get a nice consolidation range, whether it's along this trend line or whether it's something like this, well, then all of a sudden I've got a much easier stop and I've got a much clearer setup as far as risk reward is concerned. And then that way I can give it a little bit more leeway to the long side because I know exactly where I'll be wrong based off of what I'm seeing. I think at the moment this trade's not giving me a good stop point, which is what makes me hesitant to recommend it to the long side. But that being said, it is setting up. This is an impending breakout. It looks like it wants to break out soon. But is it a good trade? Maybe, maybe not. And I think if what we see over the next couple of days will give us a better idea. But I do think that the breakout will probably hinge on what Visa does. So that was a lot of words telling you I'm not sure. But I think ideally I would like to take this, if I traded this breakout, I think ideally I would prefer to trade it off the retest of the breakout, or if it's a few more days. But I think it's probably going to just break out or not, depending on what Visa does. All right, so next one up is the one that Wes just referred to, which is MRTX. So did you check, Wes? Does it have earnings coming up as well? No, so this one has plenty of time. Okay, so May 6th, so we've got a month to go on MRTX. So this is definitely a West name. Wait, so you think I have? Actually, no, you're right. May 6th. That's what am I thinking? Yeah, you're right. It's a week and a half. Okay, so no, you're right. It's so earnings are coming up pretty quickly. So you're up 3% today. Exit targets. All right, so here are your exit targets. It's right there. So your first exit target's where we are, but I don't think that's an exit target based off of what we're seeing. So we go to I can't look at this like that. All right, so look at the hourly chart. No, I think we're just gonna have to watch the daily chart. There's not enough volume here, at least not off of the data that I'm getting. All right, so there's a major resistance level here at 65, which is just a couple points away, and it's exactly where price got swatted down today, right? So that's your target right now. That's basically your target, considering you only have a week and a half. Now, if this happens, if we get back to that price today, then maybe you take just a portion off and see if we could push past it tomorrow or the day after, because we have what this is basically a bear flag, right? But we're attempting to push past the bear flag and resolve to the upside. I'd be pretty quick about it. I think 65 would be a good level to take profits, and if it got there today again, and you wanted to wait to see if it could push past it tomorrow, then give it a little bit more time, then maybe just close out half. But based off of the fact that you only have about 7 or 8 days to go, and technically speaking, this is a bear flag below resistance, I would be pretty quick about taking what I could before earnings. Okay. Which again, you're right, it was very similar to what Denise is going through. Now, yeah, and this thing could move 10 or 20%, or 10%. The average move is like 5%, but you can see we've got an 11 to 13%. More often than not, it moves like 5 or 4%. But yeah, I would probably look at the 65 as a major level. Now, if it was able to push past it, then maybe you could get a little bit more and hold it all the way up till the earnings day. But we'll see how it behaves. You can see the minute it got there today, it got hit down pretty good. Again, let's see if we can. Yeah, that was just recently, actually. So let's see see if it can get back above there, and then that would be a good spot to take some. But if it got there today again, I might give it time to run a little bit, see if it can push past it. But I'd be pretty quick on the trigger. I wouldn't let it come back down and lose this trend line on the bottom. Okay. All right, Denise, you have another one. NOA. Okay, so NOA to 1450 on measured move. All right, so I'm assuming the measured move for you is off of this triangle, right? Oops. Nope. Which measured move are you talking about? I'm assuming you maybe mean from a longer one. Let's look at the weekly chart. From this line to, are you basing it off of? Okay, so I'll go back to that in a second. Well, this is nice though. All right, well, I like the bullish breakout. Let's take a look. I said the first thing I was going to look at was earnings. So here's another one again. So they've only got a week to go, right? I do like the pattern. So okay, so Denise, I think we are going off of a different measured move. So are you doing the measured move based off of from up here? I think you are, right? I'm basing it off of the breakout of the triangle, which would be from down here around 1220. Now again, I don't put that much stock in measured moves. I think they give you a good ballpark of what's going to happen, but I think the price action itself is more important to read. But typically, when I do a measured move off of a triangle, and I think this is really I can see the cup and handle that you're talking about, but I think this is really just a triangle pattern, right? And typically, you do it off of the breakout of the triangle from not necessarily the top over here. I think that I like what I see. I think hold this till earnings. Maybe trail a stop, but I mean it's breaking to new highs, and it had a pretty nice breakout already off of a pretty key area on the weekly chart, right? So it already pushed past this 11 to 12, and then that little move to all-time highs around 264. We're past that, and we kind of left that in the dust. So just ride this as long as you can before earnings. Just trail a stop on it. This one looks pretty bullish. This was a nice move. I wish I would have seen this chart. I like that move off of 1220. That was a pretty nice breakout. Everything looks good on this one. I would just try to ride the momentum as much as I could until earnings, and just trail a stop, because obviously you don't want to give back too much of it when you're going to probably be out of it in a week. Another one that you can see 10 to 20% moves during earnings. A lot of them green, but overall, you never can trust that. But this looks pretty good. I like it. I like everything about it, except the fact that it has earnings in a week. But this looks like it could continue upwards. Okay. All right, guys. I believe I caught everything. If anyone else has any other questions, you can always ask me on Twitter. Again, at stockdarts. You can always find me on our Discord chat, and I'll be more than willing to answer questions there. Or you can even email me, stockdarts@gmail.com. Other than that, I hope you guys have a good rest of this week, and we will see each other again next Wednesday.